In May of 2024, CNBC TV18 had alerted viewers about the pain in the books of lenders in the microfinance sector. The pain is more evident in their numbers now and is expected to continue in the near term, or let's say next couple of quarters. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty. Lenders have seen their stock price correct from as low as 28% to as high as 60% in the last few months versus Nifty gain of nearly 5.5%. So from the data, one can clearly see decline in their growth rate, while asset quality has deteriorated, leading to rise in credit cost. So credit cost for most of the players in the microfinance sector is generally on the higher side, given the fact that when their asset quality deteriorates, the recovery chances are really very low. So write-offs have to be on the higher side to make up for the same. AUM growth rate has declined for most of the lenders like Credit Access Grameen, Spandana Spurti, ESAF SFB, Satin Credit Care. Now, growth has been weak for lenders like Fusion Microfinance, Suryodaya Small Finance Bank, as well as Ujjivan Small Finance Bank. Asset quality continued to deteriorate for last 4 quarters in a row. The pain is expected to continue. Hence, NPAs have not yet bottomed out. Asset quality has deteriorated the highest for Fusion Microfinance, Spandana Spurti, Utkarsh Small Finance Bank, and even the best lender, Credit Access Grameen, has seen its gross NPA nearly double in H1 FY25 over FY24 numbers. Slippages were massive for lenders in H1 FY25. Some of the lenders have already made higher write-offs, which has impacted their provisions, but kept a bit of control in the deterioration of their asset quality. Return ratios have depleted for most of the lenders, while some of them like Fusion Microfinance have reported net loss for 2 quarters in a row. Now, analysts and management do say that asset quality will see further pain in the near future, at least for next couple of quarters. Hence, you can expect credit costs to remain elevated for most of the players in this segment. Credit cost is generally high in the events of defaults, given the fact that recovery is on the lower side in this segment. Over-leveraging had been a great concern highlighted in May 24 by CNBC TV18. Many lenders have now given details with respect to over-leveraging of their customers. You can expect the AUM growth rate to be under pressure for some of the lenders as over-leveraging of customer reduces. Stock price have seen underperformance with respect to benchmark indices. Earnings pressure could keep a tab on their valuations.
Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.